Hi, my name is Tim, and today we're going to be talking about how to invest in stocks of a company. We're going to be talking about this in two parts. The first part is what do you have to do in order to be able to invest in this way. The second part is involving the technicalities in investing in a particular company. Now, without further ado, let's get into this. Okay, so when I think of a stock or a share, I usually think that since I'm giving my money to this company, I should fairly be able to get some sort of an ownership of this company. And that is referred to as the concept of equity. Equity means fairness. And what is actually happening here is the fact of the matter that in exchange for the capital that I'm giving to the company so that they could invest in research and development, they give me a portion of ownership in their company. So that's the basic concept of investing in companies. And you, as a shareholder or an investor, will receive income via dividends every quarterly, and you will also receive income via the stock price or share price increase. And that is the two reasons why investing in companies is important. Okay, so now, how do you even do this? How do you do this? Because you know what? A lot of people don't know how to do this. And I have taken it upon myself to be able to give you some insights on how this is actually done. Okay, so first, you as the potential owner need to be able to research the company. And this research involves a lot of things, and I'm just gonna tell you the basics of how to do this. If I was the beginner investor, I would look at the company mission, vision, and slogan. Those are the main things that I look for when attempting to even invest in a company. It's important because this will give you a picture of how the company's culture is. So when you determine the culture that the company is, and if it aligns with your values, then that is when I say to myself, yes, Tim, I would like to invest in this company. And when you invest in a company, it is probably wise or important to be able to do that. Okay, so now that we've talked about the first step, I'll talk about the second step. Once you've identified the corporate culture and have aligned it with your own values, you should probably go to a bank or a broker, okay? Here in Canada, there are several banks, but the bank that I'm going to talk about is probably like CIBC or RBC. Okay, these are like one of the major banks, and RBC is one of the biggest banks in Canada. They're like the fourth or fifth in making profits. But what is important here is that you go to the bank and tell them or ask them if they have a platform. With RBC, it's called RBC Dexia, and you just talk to the broker and they will help you with whatever it is that you would like to invest money in. So now that you have talked to the bank and determined whether or not they have a platform, there are some technicalities involving this transaction. First, you have to identify the ticker, and obviously you would have already done that through your own research. The ticker is 3 to 4 letters, and you are able to search it up on maybe like a search engine like Google, and then you would be able to determine the stock price. Whether if it's a TSX or the NYSE, those are the ones that I'm most familiar with. You can search the stock price at that market. Okay, so now that we've talked about the basics of investing in stocks, we're going to be talking about the technicalities. Okay, so now, once you transfer the money to the bank or the broker, they will hold that money in trust. Okay? And when they hold that money in trust, they are obligated or obliged to hold it and not spend it for their own interest. That money you gave to them will be sent to the stock market or the company. It'll be sent to the company, and then you will become a partial owner of the company. You will then receive a certificate specifying that yes, you indeed are the owner or partial owner of said company. Okay, now the benefits of being a partial owner or a shareholder of the company include and are not limited to: you will be invited or you will be able to attend annual general meetings. And these meetings are basically telling the investors of A, what are the current occurrences of the corporation, and B, what the future plans are. Now, I can't emphasize this enough. It is important to look at the budget of the company. If you do not or neglect to look at the budget, then you put yourself at risk of investment that will potentially not be successful. So I would refer to their company budget, and they release this every year for all the shareholders. Okay, now I'm going to be talking about the second part. You, as a potential investor or investor, will also be able to have a say in how the company conducts itself, based on the fact that you have invested, and the fact that you have invested. So it depends in this part that if you have invested a lot and you gain enough market share, like over 50%, then you would be able to have an adequate and notable say of how the company is run. Okay, so let's recap what we just talked about. We talked about A, how to invest in a company; B, the technicalities of investing in a company; and C, what actually happens. So those three things are what happens when you invest in a company. And when investing in companies or looking into investing in companies, I always ask myself to do or not to do. And the reasons that I provided to you provide the answer to that question. Now that we've discussed that, we have come to the end of the video. If you like this comment, or if you like this content, please push the like button or leave a comment in the comment section. and do not forget to subscribe. Thank you.